I think the number I would like to throw out there right now is 10 trillion, right? Because the total global market for ETFs is 10 trillion right now. Now it's spread out over hundreds of ETFs. There's not one winner take all. It really does look like 100 billion coming in increases the price by, it'll increase the price from 1 trillion to 10 trillion. So it'll have a 10x increase in price, bringing the total market cap per coin to around 500,000.
Bitcoin's crazy supercycle has arrived, with an anticipated ETF market reaching $50 trillion. A single Bitcoin's value could soar to $1 million within the next 10 years. This bullish forecast comes from renowned investor, entrepreneur, and mathematician Fred Krueger, who presents a meticulous mathematical analysis projecting the growth of the Bitcoin ETF market to $50 trillion over the next decade in one of his videos. As Bitcoin gains recognition as a mainstream financial asset, ordinary investors are increasingly adopting strategies akin to stock trading, likely to drive up demand. This surge in buying and selling based on market trends and opportunities could propel Bitcoin to unprecedented demand. With this surge in demand, prices are expected to skyrocket, potentially pushing the value of a single Bitcoin to an astonishing $500,000 or even $1 million. This, in turn, could signal a transformative shift away from traditional fiat currencies. We will now show you more clips of Fred Krueger as he reveals his expert insights on Bitcoin. Please take some time to like this video and subscribe to the channel to show your support. Thanks and enjoy.
In that I spent 6 years on the prop desk in Wall Street, trading at Salomon Brothers and Greenwich Capital Markets, trading north of $1 billion back in the early 90s. And, that would easily be $10, $20 billion today in sort of equivalent sort of scope of asset size. So I really understand that world very well. I've structured assets. I worked on the capital markets desk at Salomon as well to bring new asset classes to life, new asset products to life. I also understand the technical side of cryptography and Bitcoin really well because I have a PhD in math from Stanford. And, I've actually gone through the probability theory of Satoshi and checked out all the numbers in the white paper. So, I really understand that part of it. And the third thing is I really understand Bitcoin and the crypto industry. And I know Bitcoiners hate the word crypto, but, this is one ecosystem. There are wallet makers. I built a wallet that was pretty widely used on a blockchain called EOS at one point. I've bought Bitcoin, and I didn't get into Bitcoin like some people where they're like, I was in Bitcoin since 2014. No, I got into Bitcoin 2019, and I paid serious money for my Bitcoin. So I have experience of holding Bitcoin, buying Bitcoin at all different kinds of prices. Most recently, I bought Bitcoin almost at the low here, at 16,000. I bought GBTC, and so I've quadrupled my money on my GBTC this year, just to give you an example. So I have a lot of experience trading Bitcoin. I totally understand the innards of Bitcoin, the innards of Lightning. I understand all that stuff. So, I'm in a fairly unique position. There are other people who have come from the Wall Street background. James Lavish is there. Foss is there. There's certain people out there who come from Wall Street, but not a lot of them really understand the technical side. And I'm not trying to brag or anything, but just I come from that background. So I have this unique perspective, and I think this is why I have this view, which is pretty non-conventional, but I think it's accurate. So let's talk about how I see this thing playing out and why I'm so convinced of this. Back in 1983, the financialization of mortgages really started, and it was really the product of two people, Larry Fink at First Boston and Lou Ranieri at Salomon Brothers, co-invented the CMO, or the collateralized mortgage obligation. Now, there were Freddie Mac, Ginnie Mae's, Fannie Mae's, did it before, but the idea of packaging these mortgage securities into a bond with different tranches, so some pay out quickly, some pay out longer, there's a residual class. This was the brainchild of Larry Fink and Lou Ranieri. And that was 1983. And 3 years later, I joined Salomon Brothers, and I was on the arbitrage desk at Salomon Brothers. So I understand this stuff really, really well. Larry Fink created BlackRock, typo, in 1988. And another aside, he offered me a job there, and I accepted, and I joined for one day in 1988, back when BlackRock was a complete startup. And I should mention that BlackRock was started out of an investment from Blackstone. So the two, BlackRock and Blackstone, are related, and we'll see a little bit more of this in the future. So in 1997, we saw another amazing financialization, which is the financialization of real estate. So, this is we're now talking almost 2000s, and Sam Zell is really responsible for creating this product. So Sam was a real estate investor out of Chicago, and he bought up a number of office buildings all over the country, but in LA and Chicago and New York, and he created a product that made these office buildings really palatable to mainstream investors. And this product was EOP. And this was really the largest and most significant REIT. There was other REITs around, but this was the brainchild of Sam Zell. And he sold it to Blackstone in 2007, right, for, I believe, $20 billion. Anyways, he's got a great book out. If you kind of Google Sam Zell's books, it's amazing. He died recently, but brilliant man. So he saw how financialization of real estate could work, and obviously this totally changed the real estate landscape. Now, most office buildings are owned by REITs. They're not owned by individual people. Donald Trump still owns a few of them, but most of them are owned by REITs, and that are packaged and sold as public stocks. 1998, a year later, Jim Rogers, also an author of a great book called Investment Biker, launched the Rogers Total Return ETF. So he saw that there was all these people were underinvested in things like sugar and wheat and pork bellies and all these things that you see in trading places. They weren't owned by people, and so he created an index and an ETF that tracked those. And so, this is less important than the mortgage market, and it was certainly less important than the REIT market that Sam Zell built. But it was a significant, also just shows that you have an asset class, it gets financialized.
Krueger combines his Wall Street background with a deep understanding of Bitcoin and cryptography, putting him uniquely positioned to comment on the intersection of traditional finance and digital assets. He cited historical examples of financial innovation, such as 1983, when Larry Fink and Lou Ranieri introduced collateralized mortgage obligations, transforming the mortgage market by bundling mortgage securities into bonds with various tranches. With that, Krueger predicts that Bitcoin ETFs could attract $100 billion or more over the next market cycle. On the inaugural trading day alone, he anticipates an inflow of approximately $3 billion, with expectations of reaching between $30 to $40 billion by the end of the first year. Now, let's hear the rest of what Fred Krueger has to say.
How big is this market, this ETF market? Well, I think the number I would like to throw out there right now is 10 trillion, right? Because the total global market for ETFs is 10 trillion right now. Now, it's spread out over hundreds of ETFs. There's not one winner take all. There's going to be 13 applicants for this Bitcoin ETF, so it's going to be a mix. The Fidelity ETF is going to get some takers. The BlackRock ETF is going to get some takers. The BlackRock ETF is likely to be by far the biggest, and it's not static at all. So, we've seen this market go up 10x from 2003. This was a tiny market 2 decades ago. It has doubled in the last 10 years. And if I had to guess, I would guess it's probably going to double again in the next 10 years, or quintuple again, in the next 10 years. So I think, this 10 trillion number that's being allocated to these kind of ETFs and packaged products, likely to go to 50 trillion in the next 10 years. So, we're talking about a very, very big pond in which to fish. This is not like there's a small number of VCs investing in crypto projects. Now, this is huge, huge dollars that are coming into this market. So, how much is likely to go into Bitcoin ETFs into the next cycle? By the way, for those not familiar, there's a halvening cycle that's built into the Bitcoin blockchain, and that's a 4-year cycle. So we tend to think in terms of 4-year cycles. Now, whether this cyclicality will continue to happen in prices, I don't know. I'm not actually sure beyond the next couple cycles whether it's even going to matter. But let's just focus on the next 4 years for now. And I would say there's $100 billion plus is likely to go into ETFs over the next cycle. Just other people who I look up to and admire. Mark Yusko, for example, estimates there will be $3 billion coming in on day one, which is kind of, on par with kind of the amount of money Michael Saylor has, MicroStrategy, in terms of Bitcoin. By the end of the year, $30 to $40 billion is very likely to be coming into Bitcoin. And within 4 years, I would say 100 billion is on the low end, and it might be as high as 300 billion. But with the 100 billion number, just kind of as the ballpark number, we have to ask, how does $100 billion how does it change the price of an asset with fixed supply? Now, when the GLD ETF came out, gold production increased. It didn't increase 10x, or it didn't increase much, but it did increase. The supply of Bitcoin is absolutely fixed, and the amount of Bitcoin that's trading on exchanges is completely fixed. So it really does look like 100 billion coming in increases the price by, it'll increase the price from 1 trillion to 10 trillion. So it'll have a 10x increase in price, bringing the total market cap per coin to around 500,000. Now, could it be 200,000? Could it be 1 million? It's and everything's entirely possible. So, but that's the multiplier number. And I'd also like to single out a little shout out to British Hodl. You can Google him. His Twitter account is excellent for going through some of this multiplier analysis. Now, 500,000 Bitcoin. Again, if there's 2 million Bitcoin on exchanges, which is currently where it is, $100 billion coming in will buy all the money on all the exchanges. That's not happening. So, the 100 times multiplier, the 10x increase in Bitcoin price is very kind of likely in that scenario. So that's the game plan. Now, what does this mean for? I know that a lot of Bitcoiners are not going to like it. I've known that in some of the posts are like, who's this finance guy trying to, tell us that, Bitcoin's not going to change the world. Well, it's going to make some people very rich, but I'm not 100% sure it's going to, quote unquote, change the world. And the reason I say that is these Bitcoiners today are basically telling people that there's going to be this parallel financial system, that you have to sleep on a mattress, save all your money, and hold all your own keys, run your own node, and that we are headed to hyper-Bitcoinization where fiat money will have no value, and you should all move to El Salvador. Now, I've been to El Salvador a couple times because I'm very interested in how this adoption could happen in the developing world. But I am not a believer that hyper-Bitcoinization is going to happen in the next, decade or so. I believe that we are going to that Bitcoin is going to be a great financial asset to own. But I believe that the profile of the Bitcoiner is going to be the average American, pretty much, which is going to be great because the average American, after, there'll be a lot of Americans who have a significant amount of money in the Bitcoin ETF in the next year or so. And these people will really not care or know anything about keys or nodes or Lightning or anything else. So just own Bitcoin. If they want to sell Bitcoin and buy something else like the newest AI stock, they can do that.
What are your thoughts on Fred Krueger's prediction of Bitcoin reaching $500,000 per coin? Do you find his argument convincing? Do you think the financialization of Bitcoin through ETFs will significantly impact its price and adoption? Why or why not? Share your thoughts in the comments section. If you found today's video informative and would like more insights and updates on cryptocurrency and global finance, please consider liking the video, subscribing to our channel, and enabling post notifications. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the crypto space. Until then, keep questioning, exploring, and, most importantly, investing wisely. Thank you for watching, and we look forward to seeing you in the next video.